What's going on, guys? Welcome back to another video. First of all, I want to say thank you for the support over the last 2 days on some of the new videos, some of the new content. It looks like you guys are enjoying it, and I'm happy about that, and we will continue to do it. Now, today, I'm going to be honest. I don't have any trades that I think are worth my while or your while to go over. I'll share with you my day for transparency reasons. You guys can see it here on the left side. I lost $54 today. I had a winner on SPY puts later day. I lost on it early day. I had a loser on Amazon, and I end the day down $54. These trades are not that great to go over. There's a few supply rejections in there. Maybe I'll go over some of the levels here. I'll go over the levels on SPY. I'll share with you sort of what happened there. But besides that, guys, it was pretty much a wash of a day for me. Pretty boring. Nothing. Price action wasn't really there today. It was a grind higher into supply and then a rejection later day. So really nothing that I want to specifically go over here in my day trades, but there is one thing that I wanted to make this video about, and that is the IWM swing trade that I am currently in. I think that there is a lot of opportunity here on the small caps, on the Russell, on the IWM ETF for further downside. There's a very interesting low volume gap below on the IWM and on the Russell that I wanted to point out in today's video. I think this has more value to you as a potential trade opportunity than it does going over some of the mess that I made and the break-even day that I had trading. So let's review the IWM, the Russell technicals, share with you the opportunity here, and then we'll wrap up the end of this video with a little bit of analysis on the SPY and the QQQ, the NASDAQ futures, and the S&P 500 futures. So I wanted to get this video out. I wanted to stay consistent. More for me than anything else. I want to make sure I get in the habit of making these videos for you guys. So I hope you enjoy it. Press that like button, subscribe. Help me get to 100,000 subscribers by the end of this year. Let's jump into the charts. All right, guys, so here is the IWM. This is the small cap ETF, which is also the same as the Russell futures. And there is an opportunity here that I am extremely interested in. Now, you guys have heard me talk about low volume gaps in the past. So what we're going to do here is we're going to pop on the volume profile on thinkorswim, and I'm going to show you guys this very interesting low volume gap that is currently forming or has formed, and we're currently trading in on the Russell. So you guys can see pretty much right in this general area, you have this trough of volume between just about $196 and down to around $188 per share. So you can very clearly see that low volume gap. And when a stock starts to move through that low volume, it can be very aggressive, and there could be fantastic trading opportunities. Now, I want to remove that, and I want to just look at this hourly chart for you and make some sense of it. So what you guys can see here is that in the past, we had a pretty decent support stacked up around this $196 per share level. We had support here, we had support here, and we have previously attempted to hold that support. Now, over the last 2 days, the Russell did not hold that support, and it broke under that level. We had demand here, which has now been invalidated, right? We can see we had that demand, and we are now trading below it. Now, what you can see here, and it is very key that happened today, a very key move that happened today, is that the Russell turned that demand, which was previously right here and right here, it turned it into a supply level, right? The Russell broke below it, turned it into a rejection pretty much the entire day today. So this is very interesting moving forward. The fact that the Russell ETF has just turned a very major previous double bottom demand into a rejection level. Right here, you break under it, you reject it, and you can see we were stuck under that level all day today. Now, the other thing that I want to point out is the blue line that is going up on your screen. This line right here that's moving up on your screen, that is the daily 20 SMA. And previously, on Wednesday of this week, we had that level act as a support. So if I go down to the 15-minute chart, you will see right here, we had the 15-minute chart here from Wednesday hold support at that 20 SMA right there. So that was early morning. Now, later day yesterday, we had a drop under that 20 SMA. And what did we do today? We dropped under the 20 and we turned it into a rejection all day today. So the 20 SMA turning into a rejection, which was previously support And on top of that, the 196 level, which was a previous double bottom low right here, turning into a rejection today, is very, very interesting and something you should be paying attention to. Now, the reason why I am very interested here, not only just the break and retest rejection, but the fact of how much potential downside that we could have here, right? That volume profile did not start to pick up until around that $188 per share level, which is all the way down here. And there will be plenty of downside opportunity if this really starts to move. So I'm going to move this out to the 30-day. I'm going to show you this with a little bit more space on the chart. You can see really the next demand in my eyes does not come in until this 188 level, which were some previous highs right here. You guys can see the previous highs right here. And I don't expect this area to act as any type of a support. Now, it doesn't mean it's just going to go vertically down tomorrow, vertically down Monday, but I would assume that as long as the Russell is below this 196 level, that the weakness will continue and continue to come in. Something that will absolutely be opportunity moving forward here if the market remains weak, if small caps remain weak, and as long as we stay under 196. So you guys can see, I like this opportunity. I am in this trade. I'm holding Russell puts into tomorrow, and I will continue to look for Russell puts on this chart with any pop into 196. Any pop that I get into 196, I will look for short opportunities, trusting that we would stay under the supply that formed today. Now, there's one more thing that I want to point out on this Russell that could hold us up, and that is the daily chart. This is my only concern for this analysis. If it wasn't for this daily chart gap, I would be all over this with a lot of size. But there is one concern I have, and it is the high of this daily candle. The high of this daily candle is 193.64. 193.64 is right there. So I'm going to go ahead and put a green level there to signify a potential demand at 193.64. And then we're going to go into the 15-minute chart. And you can see that today, that is where the Russell held on. Right in this zone is where the Russell held on, which is 193.64. That is the gap fill level, right? So we had this gap right here. That is the gap fill level at 193.64. So tomorrow, you're going to want to see us break under this 193.64. If we do, I think this will continue lower to the demand right here. I wanted to point this out in today's video. I think this is an opportunity to be watching. And if I go to the Russell Futures, I'll do a quick Russell Futures analysis for you. It's pretty much the same analysis. We'll go to the hourly chart. You guys can see it right here. I'll get a little bit more time. Just for you futures traders out there, something to be watching. Here is the Russell Futures. Our demand is down here, right in that 1930 area. Let's call it around that 1913 area. You have that demand that was previously there, or that previous rejection point, which will act as a demand if we move into it, right? That will be that demand level. That would be your profit target down here, which is where we had previous rejections. And here is that low volume area on the chart. Now you can see we're having a very similar analysis here. If I go ahead and move these, make this red, right? You can see right there, we had this previous low, right? And it turned into a rejection here on the Russell Futures. So 20 SMA, break and retest rejection. Very similar to that IWM, right? And this is the low volume area that I am looking for. My only concern, once again, is this 193.64 level, which is that gap fill level on the daily. That could hold us up. If we break that tomorrow, though, I will gain confidence to look for this downside, targeting these lows, targeting these previous highs around 188. So guys, we just shared some analysis on the Russell, the trade that I'm in, and sort of the analysis that I'm looking for moving forward. I wanted to quickly do an S&P 500 futures analysis here for you guys. Point out one very key thing that happened today. Actually, you know what? Two things. Two very key things that happened today. Number one was the break at end of day under this 47.40 demand area. We had some demand previously stepping up in this 47.40 zone, and at end of day today, we flushed under that level. And if you look to the left, that looks awfully similar. That looks very similar to the Russell. This was a major move higher on FOMC, and we have entered that low volume gap as of close this or end of day today. So that is sort of interesting, right? If we come back up and we start to reject some of that 47.40 level, we might be targeting that 4,700 area on the S&P 500 futures. Now, the next thing that I want to point out, and this comes down to market structure, because what you're seeing here on the S&P now, previously we were moving higher, holding previous highs as new lows. What you're starting to see on this S&P is lows turning into new highs. And that is bearish market structure. And as long as this is going on, the market's going to move lower, right? That's just how it works. That's technical analysis. This is Tuesday's lows. And Tuesday's lows turned into rejections both yesterday, and it was the perfect high of day today. Tuesday's lows, highs today, that is a lower high. That is a previous low right here. This is a previous low into a new high. That is bearish. And as long as we see that starting to go on in this market, we're going to see further downside. So tomorrow, if we reject Wednesday's lows and this low early day today, if we come back up and we start to reject this, you are going to see this market continue lower. Something to be paying attention to. I think the key thing to watch is the Tuesday low that rejected today around 47.65. Also, the rejections near that 20 SMA, breaking under this 47.40. If we bounce back into this level and reject, this is something to be looking forward to tomorrow. Make sure to tune into the live stream every single morning to review the analysis. I hope you guys enjoyed this video. Take a look at that IWM chart. This might be worth some opportunity, might be worth you looking into. Thanks for watching. Press that like button, subscribe, and I'll see you in the next one. Peace.